Hello friends, I am Sushil. Welcome back to my channel Stock Wizard. Today we'll analyze the stock name Sai Life Sciences Ltd. We'll understand about the company's profile. Incorporated in 1999, Sai Life Sciences Ltd. carries out contract research and manufacturing activities for customers engaged in pharmaceutical and biotechnological industries. Now we'll understand the key points and the business overview. Sai Life Sciences is a Hyderabad-based contract research development and manufacturing organization in the pharmaceutical sector with a significant presence in regulatory markets of US and Europe. It offers integrated services across the pharmaceutical life cycle from discovery services to development and manufacturing of new chemical entities to global innovator pharmaceutical and biotechnological companies. In financial year 2024, company has completed 200 plus discovery programs and 40 plus programs have advances to clinical phases. Sai Life Sciences has a fully integrated in-house synthetic and medical chemistry, drug metabolism, biology, pharmacokinetics and trichology. In terms of therapy, they have worked in oncology and other key therapy areas include central nervous system, inflammation and antivirals. Sai Life Sciences Ltd. provides its services to 17 out of top 20 global pharmaceutical companies and several biotechnological companies. The company is accredited by global regulatory agencies such as US FDA and PMDA. Now let us see the fundamentals, valuations and key metrics. Market cap is at 18,530 crore. Stock is trading at rupees 888. The 52-week range is between 635 and 910 respectively. The PE ratio is at 76, well above the industry average of 33, reflects the stock at high premium. Price to book value is 8.5 versus industry average of 3.4, another premium valuation indicator. Then we see the ROC is at 13.9%, which is fair. ROE is at 10.9%, need improvements in near future. Then we can see debt to equity is low at 0.17 and debt to EBITDA is just 0.7, reflecting conservative leverage. EV to EBITDA is at 36, significantly higher than the industry median of 16. Growth, sales have grown at 25% CAGR over the last 3 years. So now let's understand why the premium valuation. Size premium price reflects deep integrated CRDMO capabilities from medicinal chemistry to scale up manufacturing, rare among peers. Strong client trust, 17 out of top 20 global pharma firms. Long-term contracts adds predictability. Robust growth momentum. Financial year 2025 performance shows strong acceleration in both EBITDA and margins. Now let's look at profit and loss yearly figures. In 2019, the company had sales of 695 crore and profit of 73 crore. Over the years, sales and profit have steadily grown. In 2023, sales reached 1,157 crore. In 2024, sales increased further to 1,419 crore with profit of 95 crore. And in 2025, sales jumped to 1,642 crore with profit of 173 crore. On the trailing 12-month basis, sales are now around 1,861 crore and net profit has improved to 243 crore. This clearly shows that company has been able to scale its revenues while also improving profit margins. Secondly, an important point to be noted is that company has maintained a steady operating margin between 20 to 26% for most of the years. The only exception were March 2022 and March 2023 when margins fell sharply to 15% and 14%. This dip was mainly due to higher expenses and cost pressures, possibly linked to raw material prices increases, supply chain issues, or higher interest and depreciation costs during that period. But the good news is that from 2024 onwards, margins bounced back strongly reaching 24% in 2025 and 26 on the trailing 12-month basis. This shows that the company has been able to control cost more effectively and improve its efficiency. Overall net what we'll see that net profit has grown more than 10 times compared to the COVID hit year 2022, and the earnings per share of for 2025 stood at 8.32, showing consistent improvement. The overall summary what we can get from this quarter and profit and loss statement is that Sai Life Sciences is showing steady long-term growth with strong recovery in recent quarters. While there may be a short-term fluctuations, the company's fundamentals are improving and its profitability trend looks encouraging. Now we'll see the shareholding pattern. At the very first instance, we can see promoter holding decreased. Why? The promoter stake fell only slightly from 35.23% in December 2024 to 35.15% in June 2025. This is just a 0.08% reduction, a very small change. Such minor decrease can happen due to promoter selling a tiny portion to raise funds for personal or business reasons, share dilution if company issue new shares to institutions, technical reasons like employee stock options being exercised. So is it a red flag? No, not in this case. A big or continuous fall in promoter holdings, say from 50% to 30%, would raise a concern, but here the change is too small to signal a loss of confidence. In fact, the reduction is offset by the large increase in FFI and DI holdings, which shows stronger institutional trust. So overall, it is not a red flag. Instead, the trend is positive because big investors are increasing their stake. Moving to foreign institutional investors. Here we see strong growth. FFI increased their holdings from 11.72% in December to 14.57% in June 2025. This indicates rising foreign confidence in the company. Now, domestic institutional investors, DII. This is the most interesting part. DII have increased their stake massively from 11.95% in December 2024 to 21.64% in June 2025. This sharp jump shows Indian mutual funds, insurance companies, and institutions are very bullish on this stock. Finally, the public holding. Public holding have come down significantly from 41.08% in December to just 28.64% in June 2025. This usually happens when institutions buy heavily from retail investors, while the public reduces its shares. Strong hands like FFI and DI step in. Also notice the number of stakeholders. It has dropped from 1.81 lakhs in December to 1.26 lakhs in June 2025. This suggests retail investors are slowly exiting while big players are consolidating their positions. In the summary, what we can see, the promoters are stable, DI and FFI are increasing their bets, public investors are exiting, institutions now hold more power in the company. Overall, this is a positive sign for the stock because institutional buying often indicates long-term confidence. Now we'll see the technical analysis on the trading view. Here I have drawn the support and resistance and a trend line for better understanding of the chart patterns. What we can see here, there is a strong support at 649.25. The stock has been tested at multiple times at this point, at this level. Thereafter, the stock has taken a support at 722.40, and after breaking that, the stock has taken a support at 779.50. Thereafter, we can see there is a strong resistance at 902.35. The stock is hovering at that level. The price is hovering at that level. Breaking that level with strong volumes would next reach up to a level at 1001.05. Provided the volumes are there. Here below we can see the volume spikes bar appearing, which shows the institutionals entrant into the stock, and also we can see the RSI down below, where whenever the price reaches the 40, there is a push in the price and the price moves in the upward direction. So there is a positive sign going on. for the stock, and hopefully the price should move on to a upper level of 1001.05. And this is all about the technical analysis. So let's conclude in a short summary. Sai Life Sciences is a high quality CRDMO with superior client reach and strong growth trajectory, but it is priced for perfection. For long term investors, confidence in its execution and sector trends, it may offer value. However, if you are risk averse or value conscious, it may be wise to seek a more attractive entry point. Thank you for listening. This video is for educational purpose only and is not a financial advice. It should not be considered as financial or investment advice. Do your own research before investing. If you found this video useful, please do like, subscribe and share. Thank you once again.